No, I'm not.
No.
Perfect. Well,
So rub it in. How is it?
it's still going on, but I didn't want to cut you guys short. So I'm like, I gotta jump on this as well. So I'm glad that you guys are here. It's beautiful. They're saying there might be a hurricane that'll hit, so we'll see. We'll see. If you guys don't know who I am, I'll do a little general introduction. My name is Melissa Jackson, obviously with EXP Commercial. I've been doing commercial real estate solely. I've never done realty before for the past 12, 13 years. And I've worked on projects with McDonald's, Starbucks, Jimmy John's, Little Caesars, to building towns for mayors to get reelected because of the tax dollars that are generated, to shopping centers, malls, and everything in between. Thank you for joining Commercial Real Estate 101. It's a free thing that I do every 2 weeks to show people how to do commercial real estate and or answer general commercial real estate education questions, because of the fact that this industry has close to nothing for education that it provides people. It's a whole industry. So thank you guys for being part of this. I'd love to do some roundtable here. If people would like to show their face, feel free, and or unmic themselves, introduce where you're from and how long you've been doing commercial real estate and what specialty you're in.
I can start. I'm a principal broker here in Salem, Oregon. I've done a couple of commercial deals for clients that were residential real estate clients that with their business asked me to do that. And so I kind of, it's not a specialty, it's something that I just want to learn more about. Perfect.
Love it. Thank you very much. Pleasure to meet you. And where are you from again? You said California market? Is that right?
Salem, Oregon.
Nice. Love it. Love it. Welcome. How long have you been with EXP for?
3 years. Yes, nice. 3 years.
Perfect. Welcome. All right. Who else wants to introduce themselves, where they're from, and if they have a specialty?
I'm Tim Bell from Pensacola, Florida. I've migrated over from the residential side, and I don't really have a specialty yet. So it's been about a month that I migrated. So
perfect. What made you migrate over?
Didn't want to work weekends, and I prefer to work with business-minded people versus the residential side. So
that's a good point. And when it comes to your transition this past month, is there a certain specialty you've been focusing on?
There really isn't. I know there should be, but there's not.
Gotcha. It's a lot to take in.
I originally thought multifamily, but it seems really saturated. So I'm kind of rethinking that. So
gotcha. Okay, perfect. Well, welcome aboard. Anyone else want to introduce themselves, where they're from, and how long they've been doing real estate for?
Well, my name is Marco Villavicencio. I'm from Benicia, California, just about 20 minutes southeast of Napa. My specialty is mixed use. I was doing multifamily, but I just kind of fell into marinas, RV parks, storage, and my mentor wants me to focus in on some leasing, so I'm pretty wide open. I've been doing real estate off and on for about 10 years, mostly working with investors.
Perfect. I love the fact that your mentor is talking to you about leasing, because when you make that transition into commercial real estate or you step into commercial, a lot of people are not aware of the fact that the majority of this industry is leasing. We're going to talk a little bit about that, but that controls the property values, that controls every single different facet of how a commercial real estate property is evaluated. If you guys can do me a favor real quick, I dropped a link to Workplace in the group chat down here. This CRE 101 is a brand new thing. We have a brand new group for it that's free on Workplace. Please join that. And what we're going to start doing is recording these and distributing these so that people can go back and watch the old ones. And also, most importantly, with commercial real estate, it's about who you know and who knows you, so you guys can stay connected. So please join that. That's a free group. But that link right there is below. Anybody else want to introduce themselves, where they're from, and how long they've been doing commercial real estate for?
The DM Alban. I'm actually in New Jersey. I'm an investor and agent, been doing this for about 10 years. So I'm transitioning into commercial.
Oh, wow.
And primarily residential the whole time.
What made you decide on that transition, and where are you with the transition process?
I'm very new to the transition. I do a very high volume on the residential side, but as you know, it's a lot of late nights, early mornings, a lot of driving. And quite frankly, I just want to do, have bigger deals and less time away from my family.
That makes a lot of sense. Well, welcome. And did you already transition over to EXP commercial, or are you still working on that transition? Like
Working on the transition. So
Gotcha.
I'm spanking brand new on this side.
Welcome. Is there a certain specialty that attracts you the most?
I think that's attracted to me. It's been probably office spaces and mixed use.
So mixed use, what does that mean to you?
I get well, as a residential agent, I kept getting clients that wanted to rent a certain space, but also have maybe apartments upstairs. So it's been that type of mixed.
Got it. Okay. So so kind of live work areas, retail
Mhm.
mixed in with, okay, perfect. I'm excited about that. And that market's a good one for it too. It's a good one. Okay. Anyone else want to introduce themselves? All right. I'll go ahead. Anyone else? Perfect. So I'm going to drop one more thing. I've dropped two things in here. Again, this group is brand new. So we want to grow this. Okay, I want you guys to grow this. If you guys like commercial real estate, you're trying to learn commercial real estate, or you're trying to make that conversion, you're like, no one's teaching me this. I just want you guys to know that that's not a you problem. That is an industry problem. Statistically, 95% of people that get into commercial real estate fail. And the reason why is because there's no education, no one teaching them. So how this came about, just so you know a little bit more of the background of it, is when I got into commercial real estate, I had worked up to 4 jobs while going to college and building my business in commercial real estate. I come from very humble beginnings. And I realized that I was no clue what I was doing. I was given a phone book. I was given this, go call some people. I had no idea what I was doing. So what I did is I worked for the major firms of Cushman & Wakefield and Colliers, became top producing agents for both of them consistently within my market. And then what I did is I documented everything that I learned. Literally, it's a little insane when I say this. I documented everything that I learned for 12 years learning commercial real estate so I could go back and teach it to people. So please invite people to this workplace group. The lack of education is not a you problem, it is an industry problem. So please share the knowledge. I'm not charging obviously for this group. So the workplace is below, please join that. Another thing that I did that I'd love to invite you guys to, I dropped a phone number down here in this chat. Does everyone see the phone number down there? That phone number is an AI version of myself. I cloned myself. And if you text that and you ask it questions, such as what is a vanilla shell delivery condition? If you know leasing or you're doing investments, you should know that. What is a cap rate? It should be able to answer those general questions for you. It doesn't have everything in there, but it has general commercial real estate knowledge, which again is something that the majority of people do not have access to. It's a free bot. You can text it, ask it questions, but I want to help, and I would love your guys' help in being able to give knowledge and education to the industry. Everyone good with that? Okay, perfect. So what I'd love to cover with you guys today is it ties into, sounds like we got a mixture of investments, people doing investment properties, as well as people doing leasing. Is that fair? And you guys can feel free to unmic yourselves. I'd love to hear from it. So this is not a very dry topic, which real estate can be. So feel free to collaborate. I want to try to make it so y'all aren't falling asleep because it gets really in depth with things. But I want to talk to you guys about a particular call that I got this week so that maybe it can help enlighten you guys a little bit to see what you can do and how this reflects into your market. And also as you guys are representing property owners and or investors. This is not the property, but this is a similar property. Okay. So I got a phone call from someone who's been in commercial real estate for about 4 years. Their family has been in commercial real estate for about 20 years, and they were going to be buying an investment property and wanted to see if that property was going to be a good long-term investment or if that tenant was going to be able to pay its rent. So when it comes to commercial real estate properties, they're evaluated differently than single family houses. Investment properties, when a commercial real estate investor is buying something, unless they are the owner operator, they're going to be evaluated based on There's mention of multifamily. Same thing. They're gonna be evaluated based on the net operating income of that property. The rent that is coming in. So for instance, if I was to buy this property right here as an example, okay, this property is listed, it is a Starbucks. I would be paying for the investment of this property to capture that $145,000 in annual rent. Is everyone with me on how that works and what you're buying when you buy a commercial property?
Yes.
Perfect. So when you're buying a commercial investment property, you're buying the net operating income. Now, what they were trying to figure out there was, is that rent fair market value? So if Starbucks can afford that rent, and how much are they paying? So I want to do some math with you guys so we can calculate a little bit as to figuring out what this rental number is. So this is the size of the building. This right here is the rent. That means Starbucks in this deal is paying $63 per square foot in rent. If this Starbucks goes under and this building is no longer for Starbucks, just based on generally knowing how markets work for investment properties, putting another tenant in this building is going to have a much lower rental amount, which is going to drop the property value probably about 2/3 of what it is right now. So what I want to talk to you about is, what is fair market value for rents? What are cap rates? And what is a fair rental amount to pay for your sales into your leases? I know that gets really nerdy. So I just want to break this down generally. Simply, Starbucks is right here. Do we know if Starbucks is going to make it, and is this rental amount an investment property I am purchasing a good play investment wise, or is there a high probability that they might not be able to pay their rent? Everyone follow me on that? So what we do when we're doing leasing, sorry, Marco, go ahead. I say unmic yourself.
Fair market value.
Yep. Exactly. So we're trying to figure out what's fair market value and also how much rent can they pay. So most times when it comes to tenants, they're going to have what's called an occupancy percentage in their budget. What that means is, it's just like when you think about buying a house and they're like, what's your debt to income ratio? It's the exact same thing. If I stick a tenant into a building and I charge them $63 per square foot in rent, are they going to be able to pay that? And there's many cases where that's not the case. I can think of about 3 different ones, even in my local state, where leases were signed at about $55 per square foot, and that tenant operationally could not pay more than 30. So they either filed bankruptcy and moved out in the middle of the night, or they renegotiated their rent, and that landlord's property value dropped almost in half. So what we're talking about, a lot of people don't know, which is occupancy cost percentage. When you are working with a tenant or an operator, I want us to know what that language means. If you go out as an agent and you say occupancy cost percentage to a developer in commercial real estate, they will immediately take you a lot more seriously. Essentially, all that is how much in rent can this company pay? So when it comes to this operator, they're paying $63 per square foot. Most concepts should set a budget of around 20 to tops 30%. This is a general generic rule of thumb for their occupancy cost percentage. Otherwise, they're not going to be able to pay their rent. And otherwise, that means that they're going to be going belly under, and you're going to have to re-tenant this space. And when they re-tenant this space, most likely it's not going to be there at the same amount, because space does not support what the rent needs to be. Am I making sense to everyone? Okay, so I'm going to do some general math here. Okay, So in this market, I just know these generally. Some of the top producing concepts similar to this will do about $2.7 million a year. I've got sites that you can look and play around on this that are free, get a free trial on it. It is called Sales Genie, like Magic Genie, Sales Genie, where you can go and you can type in a Burger King or you can type in a Starbucks around that area and figure out what the estimated sales production is of that store. But generally speaking, let's say a restaurant or this Starbucks makes $2.7 million in sales. If I take that annual sales volume and I put in a 30% occupancy cost, then that will show me the maximum amount that Starbucks can pay. So 2.7, if I do that under 20%, that means this rent right here at 540,000 is what they could pay annually. That makes this a solid investment play, often again, not financial advice, that this Starbucks should be able to support its rent. Now, if I take some of the lower producing ones, I used to run a lot of restaurants before I got into commercial real estate. And I look at this and I say, okay, the lowest producing one's around 15,000 a week. Take that and I figure out my annual, it's about 810. I take a 20% occupancy cost on that. You might be in a little bit of trouble. So if I take 10,000 a week, which is lower, and I take that at a 20% occupancy cost, that means that tenant cannot pay more than $108,000 a year maximum in occupancy cost, meaning that they would be in trouble. When you are working with investors, you are working with also buying investment properties, or you're working with tenants, you want to be very careful to know what the traditional maximum occupancy cost percentage is. For instance, for grocery stores, it's typically 3%. When you know that, you will know the impacts of your rent and what they can and cannot pay in their rent. Big companies know the occupancy cost percentages. When it comes to local operators, they don't. So when you are working with a tenant, I'd highly suggest that you ask them, how much money do you project on making? And also, what is your budget for occupancy cost? And what percentage of those sales are you budgeting to pay towards your rent? Otherwise, they're going to most likely sign a lease and be upside down in it, or otherwise they may play too small because they don't know how to budget correctly. But it's really good to figure that number out so that you know what you're playing with and you can advise them correctly. It affects every single factor of it. The one that I looked at last night was for a Dunkin' Donuts. I won't say in what state because I had to sign a CA for it, but it was for a Dunkin' Donuts. And even the Chick-fil-A in that market that was grocery anchored would not be able to support that rental amount that Dunkin' Donuts mid-block would be doing. So if they would have bought that property, Dunkin' probably would have failed according to the sales of every other major retail company. And also the landlord would have bought property that would have went dark, or they'd have to re-tenant with someone that was not such a strong operator. Am I making sense on that? Okay.
Yeah.
I'd love to open that section up because that's a lot that I covered there for questions and or thoughts.
Yeah, so that 20% that you're adding, that include all their debt services, payroll, everything, making those assumptions.
So 20% is typically like 30 is like the max. 20% typically includes their occupancy costs, such as their taxes, common area maintenance, and insurance, because most of them are triple net leases, and then their rent. And that's like pushing the limits, not their payroll. That's occupancy cost percentage.
Okay, thank you.
Oh, no worries. What other questions do we have on this? And or comments? Okay. So how many of you guys work with tenants and how many of you guys work with buyers?
I'm mostly working with buyers.
Okay. Are they buying investment properties or are they buying vacant properties?
Investment.
Okay. And then are they stabilized as in all the leases are signed and they're good to go? Or are they ones that you have to fill vacancies for?
Fill vacancies.
Okay. And how are you filling those vacancies, if you don't mind my asking?
I'm still new. I just have a lot of investors that want things, so we haven't even gotten this far yet.
Okay, got it. So they're trying to look for what I'm understanding to be, let me know if I'm right. They're investors that are looking for properties that you need to fill some vacancies in. So value add investment properties, ones that have some opportunities to lease. Is that right?
Yeah, they've there's a couple of resorts that we're taking a look at back east right now, and they are mixed use. You know, they have restaurants, stores, gas stations, and Airbnbs and campsites, right? So RV
Gotcha.
parking. So
Okay.
it's mixed.
Perfect. Okay. And then this when it comes to prospecting. So when we're working with a listing or an investor, when we're working with a listing, because it sounds like buying and then you're gonna have to list it, we're gonna have a lot of applications that are gonna come in, a lot of LOIs most likely that'll come in, a lot of offers, what have you, that'll come in. And our job a lot of times is to mediate, figure out who's going to be a viable tenant. So I hope that this helps you guys with asking those questions for your landlord group, because not every deal is a good deal. Especially when you're filling spaces, you can burn your reputation, not you obviously, because you're in this class and you're learning new things, but people will just chase a particular deal. They'll stick a tenant in there, the tenant will go belly up, and then you get known as the broker that just does a bunch of deals where the tenants go belly up. So I hope that this section's helpful for you when you start getting to filling those vacancies, to help you with vetting them a little bit. And I can give
Yeah,
it more tips, like,
Yeah, we've been doing a lot of, I've been doing a lot of underwriting. I've been studying how to do underwriting. And so
yeah.
we have been taking a look at the cap rate, the NOI, the expenses, the value adds, and it could be very complicated.
Yeah, you're right. And I mean, I think you and I've spoken before, and you obviously, you know what you're doing. A lot of people don't do those kinds of things, or they don't know where to start. I think everyone on this clearly has the right intentions. You guys could be spending your time in another spot doing other things, but you're 100% right. Like doing that underwriting, doing that due diligence is huge versus just getting a deal done. Is there anything that you're running into the most on these types of deals or trying to figure out in your underwriting for your representation for your investors?
Well, I think you mentioned something very interesting where you're saying like a store uses 3% versus maybe this Starbucks probably uses 20%, right?
Mhm.
So the percentages, I still don't have a grasp on them because there's mixed use and I have to underwrite every single one of these things separately, even though they're all being sold as a package.
Yeah, exactly. And that's tricky. So trying to figure out comps is what I'm understanding is the most difficult thing for you to try to figure out right now. As
Yeah,
to what,
I can't find anything on LoopNet or CoStar.
Mhm.
Anything that gives me a similar comp to these unique properties.
Yeah. And that's a very big challenge. One thing that I've also mentioned before is it might be good at some point as we network against who you know. What these big brokerages do, Colliers, Cushman, JLL, all of them, they have often an internal process for gathering comps from appraisers, from OMs, or whatever that is, or trading comps. So if we can collaborate, maybe we can find some more comparables long-term together, but short-term wise, I'm sure you've maybe reached out to some appraisers or something like that, that might be able to help you in the interim.
Yes, we have.
Huh. If there's anything I can do to help out, I'd be more than happy to look at it as much as I can. And you can ask for my calendar link to the text message thing I gave you as well. If there's anything I can do to help, but I know that commercial real estate's the most difficult thing is finding those comps altogether.
Thank you.
For sure. Anyone else have thoughts and or questions or deals they're working on that they would like to talk about or ask questions on?
I had a question.
Yep.
Sorry, I don't have a camera. Um, my question is more regarding like as far as like underwriting, like we were kind of talking about right now. Um, it's way different than like single family that I'm dealing with, or
Mhm.
on that side. So I don't know what like websites or companies you recommend that give that better way of comping the commercial side of things.
Well, I'll drop my calendar link down here. You can book a time. I do commercial real estate consulting. I do run my own group everywhere as well. And I do have courses on it as well that can teach you the general basics of commercial real estate. As people are talking about underwriting projects, to speak to a little bit what the previous gentleman said as well, there are different property types. So how that works is they often have different lease types. There's going to be a full service excluding janitorial lease, modified gross lease, and a triple net lease. Those three different property types will dramatically impact what your property is evaluated at. So knowing what kind of lease types you have and then also what fair market value is and a restructure can work drastically. Just as an example, for instance, there was one space that I fixed that was around 5,000 square feet. I changed their lease type and it would raise based on evaluations, the value of that property around $384,000 by switching a lease from a full service, excluding janitorial, to a triple net lease. So knowing how the leasing game works in commercial real estate, it's very important to understand so that you know what the net operating income is and you know how to evaluate it. There's so many different ways to do it. CCIM is a great tool and resource, but they don't teach you how to do leasing deals. I've got an entire commercial real estate 101 course, if you're interested in it, that will teach you those different lease types and how to do those leases so you understand how to evaluate things better and look through them. But also my calendar is below, so I'd be more than happy to help however I can.
Are you working with a lot of people in California, Los Angeles area?
Yes, I'm based out of Idaho. I joined EXP in March of this year. And right now my group is in 16 states, but I operate nationally. And then I also consult internationally. So there's lots of different ways we can figure that out.
Awesome. Thank you. Appreciate it.
For sure. Len, which link did you want me to drop?
The link to that, the course that you offer.
Oh, for sure. Yeah, let me drop those.
Thank you.
For sure. There's two different ones that I do on that, not to go into a big sales pitch here, but there's CRE 101, which covers the basics of commercial real estate, different lease types. Also, it covers how you underwrite properties generally, letters of intent, those things as a basic whole. And then there's also landlord elevated, which covers how you fill vacancies, how you get clients, and then how you take care of them. So they build on each other. So I'll drop both of them down here and I'll pull the links for them. But I'd love to have you guys check those out. Whom else can I? For sure, my pleasure. Who else can I answer some general deal questions for? Okay. Did my answer your question though when it came to that, Julian? On your valuation?
To be honest, I got a little confused, but I guess I had another question based on what you were asking right now, because this is just an example. Like I see a big lots like going vacant, right? Like supposedly they're going through bankruptcy. And I don't know how to attack those situations, and I don't know if you can shed light on that.
For sure. So the other one, I just don't want to give you a blanket answer, but if you drop your thing into the property valuation, into the workplace group, I can take a look at it there too. Or just book a time with me. I just have to look at the rent roll to show you how to evaluate it. For the other questions for those bankruptcies, ironic you mentioned Big Lots. I'm actually reaching out to them right now as well. On a lot of their locations. So with these mass closures, what I do is I always pull a list of every Big Lots or every company that's going to close its doors, and I find the property owners. You can do that often through CoStar if you have it. Do you have CRE Pro?
Yes, I don't have the paid version yet, but I signed up just for the free version, I guess.
Perfect. So CRE Pro will show the ownership for you as well. And then last but not least, the easiest and cheapest way to do it is to get the ownership from a title company. And then you pull out pull the ownership from title. When you get the title, it's probably going to give you an LLC. That's the owner of that property. And then you're going to have to look up that LLC on your Secretary of State. And then after you do that, you're going to get into having to find the ownership information. CRE Pro is the easiest to do it. If it's a one-off one, I've got a whole support company. I can shoot them over an address and have them pull it real easy for you with some owners. But the
Uh-huh.
pitch essentially there is reaching out to them saying, hey, I know that Big Lots is closing a lot of their locations. I
Mhm.
wanted to reach out to you and see what your long-term plans and vision may be for this property.
Mm.
If you're looking to re-tenant it or sell it, and if so, I'd love to connect with you further. And I send those to every Walgreens, every CVS, and everything in between. I do cover that more in the landlord elevator one, but again, I want to give you guys free stuff. So just let me know how I can help and I can pull the ownership for you. And you can DM me and or drop it in the group.
Will do. Thank you. Appreciate it.
Yeah, and that always typically works. What you guys might find is if it's a bankruptcy chapter 11, that might take some time, but for the most
Uh-huh.
part, you want to be contacting the owner versus the tenant.
Gotcha. All right. Sounds great. Thank
Sure.
you.
What other questions can I answer for you?
Maybe we can, I'm sorry, I'm driving right now, but maybe we can touch base on that commercial plaza you and I talked about 2 weeks ago. I remember when we talked, you had said that the potential per foot could be like $11 per foot. But I did some light underwriting
Mhm,
on the, the price per square foot. Just
mhm,
doing like a 20% increase, it would definitely bring in a substantial amount more, you know, per lease. But then I also did a calculation for triple net, and on that triple net, it basically almost 113% increase on the rent. So
mhm,
how can I make that feasible for the current tenant?
mhm. Yeah. So to
Still make
answer,
it attractive to an investor.
yeah, well, and that one's gonna take a lot of hand holding into the whole process. So I know we generally kind of looked over it. If you've got a rent roll, we could sit side by side and kind of figure that out, approach towards it. But for people that maybe weren't on that last call, what we had talked about is there's a shopping center that he's working on that is called what's a value add project, meaning that the leases are below fair market value. And also they're the wrong lease structure. So they're not triple net leases, meaning that he's losing a lot of money. How much money did you say that changes your rent by? Brandon, how much of a difference did you say it made?
So I think they were 159 a year, and then it changed it up to 239 a year, just going to triple net.
Perfect. So what I would do in that case, so what he's saying is the property needs to have its leases restructured to be fair market value. If he does that, the value is going to go up substantially. It's around $40,000 roughly in NOI. Did I catch that number on the low side? So 45,000.
I believe so.
Okay, so that changes his value of this property, just so everyone kind of goes, because the last one wasn't recorded. The value of his property, if it's a 6.5 cap rate of return, which is a random thing to know on investments, would change the property value around $615,000. So he's trying to figure out, how do I approach these tenants and tell them I need to change your lease structure to be a triple net lease as it should be with fair market value? Or how do I sell this property to make it so that the investors who buy this property understand that there is a huge amount of upside for the project? Am I understanding your question correctly, Brandon? So in the,
Yeah.
okay, so
Sorry.
oh, you're fine.
Make
I
sure
know
I'm
you're
muted whenever I'm not actually talking.
So in order to do that, I do a couple different things. One, I would go to the landlord and tell them, hey, this is what you could do to stabilize this. This is what fair market value is. Do you want to be the one that does it with me? And if you do, you're gonna have a huge amount of upside. And if we do this, it's gonna take us time to stabilize this property, because I can't go to every single tenant tomorrow and jack their rent up. So I would have that conversation with them. I would look at your rents and see when your leases are expiring, if they do agree to be the ones to stabilize it, and I would compartmentalize it and go through a couple tenants at a time. Don't renew
So
any, what?
for this particular seller, they're just completely getting rid of their whole portfolio. So it's one of those situations where we have to present it to the investors to just say, hey, this is where you could be.
Perfect. So in that case, if they do not want to be the one that works with you on it, what you're going to do is you're going to look at your offering memorandum, which is your rent roll, breaking down all of your tenants' leases, as you probably know. Other people might not, but it's breaking down every tenant that's in here in this project, and then what their rent is, when their leases expire, and then also if they have an option to renew, what those are. That's what an OM is it breaks down the whole value of the shopping center. And what I would put together is I'd look at that OM and I would do a pro forma OM, which is essentially a breakdown of how you calculate your value of the property based on if it was stabilized. Many people will sell something based on a pro forma net operating income. Your cap rate might be higher because those aren't actual leases in place. But again, if they are expiring soon and not locked in for indefinitely, a lot of investors will buy it, and you would just change the way you market it to be based on pro forma rents, not based on actuals. And if you and I book a time together, I can show you exactly what I'm talking about. Does that make sense? Did I lose everybody?
Yeah, that makes perfect sense. So I do know that all the tenants in the property are on either a 12 or 24-month lease. So the option to renew or renew early is something that would be beneficial.
Yeah. Perfect. So that's good to know, because 24 months and 12 months is not a long time for commercial. But a lot of these investors, they don't want to be buying something that has an option to renew for 5 years as defined. So that's a good value add investment play, subject to how you market it and which investors you do. But people will wait 12 months to stabilize a property. Also, when you have 12 months out, some tenants for the right landlord will renew their leases early, and that can stabilize the property sooner rather than later while they're under contract. So the buyer could offer up some free rent while renewing their lease early. Does that make sense?
Yep.
Perfect. Anyone have questions on that answer? Everyone clear? Perfect. Okay. So I'd love you guys, against a free resource, text this number. You can ask a commercial real estate questions, 208-389-8440. It's also a workplace group on there. We can love to invite more people to commercial real estate, and you guys can ask questions in there. You guys can bring questions to the table when we show up to these. I want to make sure that we're working through deals and answering the questions that you guys want to know. Also, there are a lot of repeat things that we're going to learn, so recording these moving forward will help a lot, such as modified gross leases, different lease types, LOIs, and all of these different facets. But if you can help me with reaching as many people as possible, I'd appreciate it. And that phone number should answer a lot of questions for you. It's still in beta a little bit because I just launched it, but my goal is to give you guys knowledge free in your pocket that you can ask. That make sense?
Perfect sense. Will you be posting this one on the workplace page?
Yep.
Since I was driving, I missed quite a bit of it.
For sure. Yep. We'll drop that in there. All right. Any other questions and or deals I can answer for you guys before we wrap up? Perfect. And then Glenn, I dropped those below too for you. Thank you guys so much for joining. Feel free to ask the robot AI version of myself some things. And I've had people asking cap rates. I hope this was helpful. Let me know on specific deals. I can help you out. You know, my calendar, whatever it is. I want to make sure that you get the walkthrough one-by-one attention that you guys deserve. Sound good?
Thank you so much.
Thanks so much. Talk soon.